sTAtic here. Good morning. All right. All three people settle in. We got 10 viewers. That's all right. First stream was, I think the big one, like, sTATic's back. Oh my God, 4 years. And that one was like 250 viewers. I'll take it. And the one yesterday was like 150. So hopefully we're going to find a bottom soon, just like on a chart, and we can start climbing back up. We need some accumulation of some viewers. Yesterday's big trade, right before I went off stream, was MOBX. I can kind of take you through how that one went down. That was a pretty sick one. So yesterday when I left you, we were down here. MOBX, again, I really don't care about the news, but I guess to put some context behind why this 40-cent stock, or actually I guess previously 17-cent stock, is now trading at $1.12. They make some sort of Faraday cage for whatever, and I believe they got a military contract to install Faraday cages on missiles, cruise missiles, Tomahawk missiles, Predator missiles. For those that don't know, a Faraday cage basically prevents electronics from getting destroyed by EMPs, electromagnetic pulse waves. I don't know if there's some new emerging EMPs side effect of nuclear blast, but also you can have EMPs without the nuclear. But I don't know if there's some new technology that targets EMPs at missiles, perhaps. But anyway, they got the contract and they're moving up. Yesterday, about 10:15, 10:30 before we left, I got in right here, stop loss here. And I ended up targeting basically a 1.5 to 1. But as the day progressed on the 1 minute chart, I did some what's called shelving. I just followed the bull candles and kept moving my stop loss up and up and up and up until I got it right about here at this yellow line. And that was a 47% trade. I'm happy with that. Would have been cool if I knew this was going to happen. And it just kept going and going and going. I guess if I had known that, which, hey, don't get greedy. Pigs get slaughtered. Don't be a pig. But if you had rode this all the way up to the peak, 178%. And as of right now, during the London session, I believe it's up 532% since yesterday. Looking at this chart on a 5 minute, purple dotted line here is the New York Midnight Open. That's when the algorithm resets. I'm liking this as potentially bullish bias for the day. Believe it or not. I mean, how can this thing go any higher? But one thing I do like is it's already swept the liquidity below the New York Midnight Open. That would be right here, that yellow line. If you go to the 1 minute chart, let's see, was it the 1 minute? Where was I looking? 15 minute? Bear with me 1 second. Chat order block, bullish order block. Yeah, this was the liquidity sweep. Taking this out, drop down below. If you go on a lower time frame, like a 10-second, what you would see in this cluster is an inverse fair value gap. Looks like it's come back down, respected the New York Midnight Open on the 1 minute. And we will see how the morning progresses. Not going to jump right in it at 9 o'clock sharp when the market opens. Going to wait, or 9:30 rather. Going to wait and see how the first 15-minute candles develop. If you look at it on the hourly, it's got rejected up here at $1.32. A lot of wicks up here. I am noticing, though, not a whole lot of rejection volume there. That's not anything really significant there. So there is potential that it catches some sort of equilibrium down here. Maybe it goes back down, tests $1, and then takes off. But we're going to treat it like it's a fresh day. If it is, if you look down here in the bottom right corner, my P&L for the day is 0. So we're starting over. I thought this morning we would look at, here, let me do 2 more trades from yesterday. This was RXT, got in right here, set a 1-to-1, stair-stepped it, ended up making, at this yellow line, about 8%. And then Sabre was the other trade for the day, which I got 5% off of. And then there were a couple little minute things, but nothing really worth mentioning. So yeah, it was a positive day. Bitcoin, I guess, would be the story of the morning. We're at $71,444. Bear market over, right? Bull market on? I don't think so. If you go on the weekly chart, we talked about fair value gaps. Most likely, this is probably just a retest of, at a most, a fair value gap retest could go as high as 88. There is another fair value gap right below it, which we're testing right now. It needs to get past 73.5 to even make an argument to start attacking the 80s. Not really impressed. I don't believe the market is, in. We talked about volume profiles yesterday. They are defending this line right here with that lower wick. But again, there's no liquidity grab here. When this wick came down, what liquidity are they really grabbing? This? I don't think so. I think they still got to go challenge this, which is at about 50K, 49K, right? Great psychological number. I could see a circumstance where whatever we're doing in here, eventually we come down to 50, scare the crap out of some people. Oh my God, we broke 50. And then hopefully that will be the bear market bottom. But again, others are calling for numbers like down here, somewhere in the 30 to 35K range. Also certainly possible. And there is confluence there with a 78.6 fib retracement that Bitcoin likes to do. And that 78.6 fib is right here. So yeah, let's see what happens with Bitcoin. If you go back on the, delete this and this and this, put this back on log. Daily time frame. You go back to the previous bull market, 69K. You'll notice point of control was way down here at 8. Never got down there. It stopped at 15. A little bit of a minor shelf here. If you run the volume profile from the bear market bottom in 2018 to the 69K top, it caught this last lip right here at 15K. So current point of control is way down here at 17. If it follows suit and comes down to 45K, which is my number, you can see that there is a pretty healthy volume shelf there. If that volume shelf does not hold, your next logical location is 37 to 32. I don't see it going all the way back down to this original accumulation. I think that would be a little, I think 30K is a little unreasonable. So either I'm going to be right at 48, 45, or it's going to just go past that level and probably target 37, 34. Also reasonable. I thought this morning, let me go to a bigger screen here. I'd go over like, I posted this in a couple of Discords throughout the community back in, I think, November of 2025. It's basically my explanation as to why I thought a bear market was in when we were probably at about 100K still. Just kind of take you guys through the cycles. And I know, why are we looking backwards? Well, Bitcoin runs on cycles, so it's important to understand the cycles of Bitcoin. So even if we don't need this information right now, we might need it at the bottom, of, as we head into the next bull run. Bitcoin trades on this 4-year cycle. If you look at this chart here, the purple lines over here are the halving. This is when it has peaked, right? Peaked here, peaked here, peaked here. And then it peaked here October of 2026 at 126K. The red is the bottom. That's where it bottoms out. And you can see the first one was 12 bars here, but then we hit 17 and 17 and 17. The whole cycle here from bear market bottom to bull market top ran 1,065 days or 35 bars. 1,066 days and 1,065. I mean, that is not a coincidence. That is spot on as to what the Bitcoin cycle does. So anybody who's not paying attention to these 4-year cycles needs to be. This was our bull market here. This is 15K. This is 126K. This is the parallel channel that it ran for support. You can see bottom of the channel, heart line of the channel, and then right here during this Wyckoff distribution, not only did it break the heart line, but it did a fair value gap down through the bottom of this trend line. Bad news. You look at this chart. Each one of these impulses up, impulse up, impulse up is represented here by these rectangles I made, and you can see that this last one here really was a lot less momentum. It didn't even get over the first two, so that's a bad sign. This was during the 69K bull market. This is the bear market. Each one of these impulses down is represented right here, and you could see that there were signs that the bear market was losing momentum because each one of the impulses down was less and less and less. And then we look at the 126K run, same concept. This was the initial pump from 15K. This was the ETF news that brought us to 70. This was the Trump pump. And this was the we broke 100,000, we're going to the moon. Diminishing momentum, early sign that the move is over. This was the big one, though. SMA, 50-week SMA is represented by this green line here. When we broke this 50-week SMA, we not only got one, two, we got three candle closes on weekly timeframes below that. That is indicative of a complete change of trend, which we ended up getting, as we know. You can see, if you look back, same concept here. Once we break this yellow line here, it never comes back. It sometimes will come back and retest it, as we saw here in, oh, I'm sorry, the green line. I'm looking at the wrong line. How do I delete that? Okay, start over. 50-week right here. Once you break the 50-week, you will often find support here, but you get rejected by the 50-week. You can see that here. This is back in 2018. 2018, broke the 50-week, found some mid-air support, got rejected, and bear market's on. This was 2014, same concept, broke, half-ass attempt, Dunskies. And then the MACD. MACD, if you look at 2021, once this happens, there is no returning from that. This is on a monthly chart. I believe this is monthly. Let me see. Yes, MACD monthly. Once the MACD monthly breaks here, it doesn't ever come back. 2018, 2020, 2014. It's just, and then present day. This was November, October, November. So that's another reason, another confluence. And you can see the price action back then was still pretty elevated, but this is why I got out before this happened. Here's that 50-week moving average, which I showed you. We had 3 candle closes. So I exited my position way before we even got to that 50. Momentum. This is, what am I looking at here? Yeah, that's, I think I already showed that chart. Oh, okay. So I got ahead of myself. That was the momentum part. This was the Wyckoff distribution. Pretty classic Wyckoff distribution. That is the messiest rectangle I've ever drawn in my life. This is what's known as an upward thrust. Price takes out previous high, but fails to close above it. You can see even here on a line chart, it didn't really find any support. It just kind of collapsed after that. Oh, here we go. Here's an example of a Wyckoff distribution. Here's that high, fails to take it out, drops back down. Look at this chart and look at that chart. Tell me those aren't very similar. Almost spot on. This is an interesting one. Everybody remembers October 10th. A lot of people on leverage got completely destroyed. What the heck happened? CZ destroyed the crypto market. I just lost everything. if you were on leverage or in certain circumstances. I was fortunately, I only trade spot. So yeah, this was a scary day because I watched large amounts of money disappear, but then it came back up. So I was okay. But I draw your attention to this. This happens every cycle, and people forget because 4 years is a long time. This is not an anomaly. This is baked into the cake, and I will show you. What did I write here? That was attempting to maintain structure at 108, but when it did break, that's why I personally sold at 107. Yeah. Okay, so here's the scam wicks, right? Here's 2000. Let me delete this. Here's what happened to us all on October 10th. Watch this. 2014. Here's the bull market clock that kicked in, right? That says, okay, the market should be over now. And then we got this big, giant, scary wick. Here's 2017. Here's the clock kicking in. Here's that wick. Here's 2021, last cycle. Took a while longer, but giant, scary wick. Point of the story is every time we see this, every single cycle, and this is on the daily chart, by the way, it never comes back. You can get some dead cat bounces to fill these fair value gaps, which it did, came back, got rejected by this fair value gap, this inefficiency. But this is always indicated. Here's October 10th. Here's the clock, and here's the wick. You see this stuff, time to get out. Ideally, in the crypto market, you want to get out, obviously, before you see this wick. So running with the clock is a pretty good way to do it. RSI on the 2-week time frame. Again, green is the top of the clock. Red is the bear market bottom of the clock. Purple is the halving. Notice that every time we hit a peak here on the 2-week RSI, once the 2-week RSI breaks this 50 mark, we have never recovered until we hit a bear market bottom. This was in I believe 2014. This was in 2018. This was the 2021 cycle. And this is when I posted this in November of 2025, when we were still at like 100, 107K, whatever. We were already breaking the 50 RSI on the 2-week time frame. And if you follow the pattern here, I mean, it'll try and hold, tried to hold. But yeah, this didn't even try and hold. I mean, this is just complete, utter rejection. And we're headed lower. Cup and handle on the last cycle here. This was 69K. We had a beautiful cup and handle here with the handle right here. That was the ETF pump. And if you take this on linear, the measured move of this cup and handle is almost precisely 126K. So this was yet another confluence to let us know that the market was over. Fib retracements. This is something to keep an eye out for this coming cycle if you're interested in accumulating Bitcoin. We talked about fib retracements to the downside. Here's fib retracements, expansions rather, to the upside. In 2000, when is this? Previous cycle 161. All right. So in this cycle here, from 15K to 126K, we hit a 141 fib extension from the bottom. In the cycle before that, we did not hit a 141. We hit 161. This is the 69K top. So this cycle was less of an expansion. So if we follow this pattern, if I go back in time to 2018, we would expect it to be a higher fib, right? Well, let's see what happened. Well, look at that. In the previous cycle, we had a 241 fib extension. Not 141, not 161, but 241. So what we are seeing is diminishing returns on each cycle. Giant pump, less of a pump, less of a pump when we hit 126K. And yeah. Okay. Yeah, I guess that is boy, I blew through all those. Pre-market here. Let's see what's pumping. Brew is on my list. Mara, I think I took a small trade on that yesterday. RXT is still pumping up 10%. BMNR, DLXY. Looking for stuff with liquidity. This does not have a lot of liquidity. Trading volume is only 30 million. Well, we'll see when it opens at 9:30 whether or not we get a little bit more of some volume in here, some action. Anybody have any charts in chat that they want me to look at this morning? New York Stock Exchange, FIN, doing well. Let me take a look at FIN. Yes, it is. FIN is up. You know, I'm going to add this one to my... keep an eye on today. Let's back out. Look at a 4-hour time frame. Well, looks like eventually it's got a date at some point with this right here, which is right above the equilibrium. Again, equilibrium is nothing more than a 50% fib. Right here, 50 fib. Obviously, in trending markets, when you're going up, right? 50% retracement is a pretty good place to catch another leg to the high. Conversely, if you find yourself in a situation where you've broken the 50 fib, maybe hit a golden pocket, time to get wary. There are certainly circumstances where it comes back to the 50 and gets rejected. With golden pockets, oftentimes you'll find an initial pump, rejection at the 50, retracement to the 78.6, 88.6 area, and then maybe, depending on other confluences, you find some sort of ground and it moves up. But I mean, this would take, this is a 4-hour chart, so I mean, this could take a week or a month, or, you know, it just finds a 50 fib right now and rips. One thing to keep an eye on, you can create what's called a DRT tool with your fibs. All you basically do is take everything off except for 0 and 100, and then quarter it, 2.5, 7.5, and half. One of the things the algorithm likes to do is, particularly in circumstances where you create a high, taking out liquidity, and then go to the downside and take out the downside liquidity. So basically, this is your sell side liquidity, and this was your buy side liquidity. And what the algorithm did here is it took out all the people shorting it, and then it took out all the people longing it. That's kind of like a great reset for the algo. So if you draw this DRT tool, if you see a circumstance where a high has been taken out and then a low has been taken out, draw a DRT with these fibs, which again is just a 50 fib and quartering it. And if you go on whatever time frame you're looking at and you see, and it looks like this actually might have potential to do what I'm about to illustrate, especially given that this liquidity got taken out too. If you see a fair value gap, a bullish fair value gap that goes right through a 25 DRT, that is a really good indication that at a minimum, it's coming back to the 50 fib, most likely headed back to at least the 75 in this circumstance. And why do we know that? Because this thing has run out of liquidity. Here is its only current liquidity. So it's going to want to typically go attack sell side liquidity. You'll notice here that even this little smart money indicator is telling us that we have a weak high here. So over this 4-hour chart, if we do get a fair value gap penetrating this 2.5 here, 1 second. Sorry about that. I had to say goodbye to my daughter. She is headed to school on a 2-hour delay. We had a little ice storm up here this morning. So if we get a fair value gap penetrating this 2.5, what you would want to do is then drop down to a lower time frame and start looking for an entry. Obviously, if let's say it creates a fair value gap here and you set your stop loss here, it's a 4% downside stop loss for the potential to gain 7%. But oftentimes with a fair value gap, it will retrace back down into that fair value gap to find support. So if you go to a smaller time frame like the 1 hour or well, if you're on a 4-hour, you should probably drop to a 15-minute. If you're on a 1 hour, you should drop to a 5. But you could get an entry, like a sniper entry, a lot lower. Still keep your stop loss below this liquidity wick, but then you increase your ratio of potential risk to reward. I will say this about risk to reward. 3 to 1s are great, but probably the smartest thing to do in any trade is really just set a 1 to 1, but not take profit at the 1 to 1. Set the 1 to 1, set it and forget it, let it ride, create a notification for yourself. I'm going to add an alert, for example, if I was in this trade. And when that thing pops off, say, okay, let me start raising my stop loss and doing what we talked about yesterday, which is just shelving. So, for example, if we go back here, let's say you had entered a trade, I don't know, down here, right? So here was an order block created. It came back in, tested that order block. You got 2 swing failure patterns. You got a bullish engulfing with some pretty impressive volume over the SMA. And you said to yourself, all right, I'm in. I'm going to set my P&L right here. Oop, wrong thing. And I'm going to, go right below this order block. So I'm risking 2%. And I'm going to set it 1 to 1. Yeah, whatever, close enough. So anyway, you get in, price goes up. If you drop to a smaller time frame, like the 5-minute, where is this trade? Back here. Okay. So now you've hit your target, 1 to 1. Again, you can see it's almost like the algorithm knew that most people would be targeting some sort of 1 to 1 because it literally wicked up and came back down. You lock this in. Okay. You can do what's called shelving. You can be patient. You can wait for retracement. And then once this thing started taking off, this right here is a change in the state of delivery. It's called CISD for short. A change in state of delivery took place. So where is the logical shelf? Would you set it here? Probably not, because you might get wicked out, right? But you could raise it to this obvious shelf right here and raise your stop loss to here. Now, by raising your stop loss to here, you are guaranteeing that at a minimum, you are going to make 1%. And at a minimum, you ain't going to lose anything because you're already in profit. So you've already raised this up and you got nothing to lose because you own it for down here and you're going to be at 1%. So yeah, look, it did not go back down below this order block right here. Okay. This shelf held. Your stop loss was just below that, like $69 or whatever. And then it goes up again. And you look for the next obvious shelf. Next obvious shelf would have been this change in the state of delivery right here. So as soon as this thing went out, upward, man, words are failing me today. You would have raised your stop loss up probably to this shelf right here. And then, yeah, and you just keep doing that. Next obvious shelf would have been probably here. Would not have put it here. That's a shelf. Found support. I don't know if I would have raised it after that because I don't see any obvious shelves. This one here to be a shelf would have had to go a little farther away and back test. So probably would have gotten wicked out here at $74. And the total trade would have been, where is my P&L? Where'd she go? We were down around $69, right? Way down here? Where's she hiding? There she is. Okay. How do I grab that? All right. So you turned a 1-to-1 into a 7% trade. And your original was, can I grab that? Yeah. I think we got in, I don't know, down here. Something like that. So anyway, it became a 5-to-1. Yeah, just shelving it. Once you're in a trade, don't necessarily gobble up 1% and then lose the opportunity for close to 8%. All right. So today's plan, I'm going to market opens in 20 minutes. Just a reminder, this is not financial advice. I'm not telling you to copy my trades. Not all trades go well. Risk management is number one thing you can do. Never whole bag it. Take a very small percentage of your account. You'll notice on that trade yesterday, $1,088 profit or whatever. It said I was, I think my account was up because of that trade. 0.12% of my account or something like that. I don't even know. So do the math there. I'm not whole bagging it by any stretch of the imagination. I think people who have written books about this stuff, I haven't read one in a long time because they invented this thing called YouTube. So now you don't need to read, you can just watch. I think you're not supposed to risk more than 1% of your entire account on any single trade. And typically, a lot of people in this community stick to one indice or again, words are failing me. You know what I mean, though? Like if you go in the New York Stock Exchange world or you go into stocks rather than crypto, there is, durable goods sector and the energy sector and the financial sector. I think the rule of thumb is you're supposed to do no more than 1 to 2% of your account on any particular trade, and you are not supposed to have more than 2 trades in the same sector. What we do, a lot of people in the crypto world do, is they're just trading crypto. And that is kind of one sector. And so when things like Bitcoin drop, the whole sector drops. Day trading obviously is different. I really don't care about sectors, but if you're looking for long-term investment, definitely try and diversify your portfolio so that if one sector goes down, we can go to FinViz here. I believe they have sectors here. Portfolio, map, screener. Where are the sectors? No. Let's see if it's in the screener. No idea. Anyway, it's somewhere in there. Good morning, Mastica. What else we got in here? Chupik Hups? Is that how you say that? Good morning. sTAtic, good to hear you again. Jeremy, thank you very much. Yes. You're going to copy one off of me, no fried rice? All right, brother, you do you. But again, disclaimer, sTAtic is not a financial advisor. This is for entertainment purposes only. Just remember, if you do copy me, that means you get to copy me when we make massive gains like 47% yesterday. But you also get to copy me when I'm wrong. and it drops 20%. But yeah, just make sure you have stop losses. Stop losses are important. Yeah, I am very interested in MOBX today. I don't know if this one's done. Let me start playing around with this chart and seeing if I can find a setup. All right, we've already swept the Asian low here. And we did it with an inverse fair value gap. With substantial volume. That is just as much volume as we saw over here. Yeah, this was a big wick candle on the 1 hour during the aftermarket hours. Did not really have a lot of volume behind it. It's probably just due to lack of liquidity. Mm, 4-hour swing failure pattern, potentially, but 2 hours and 44 minutes to go is a long time. Four-hour definitely has more volume on this wick here. Yeah, I think if I'm going to trade this today, I am not looking to hold it terribly long. Because I can see, I know this is the worst thing that a trader can say, but it could go up, down, or sideways. It's definitely not going sideways. It's going up or down. But I'm kind of unclear as to direction right now, which is fine. I'm going to wait for the first 15 minutes of open from 9:30 to 9:45 and try and see if I can get some sort of daily bias. A lot of liquidity up here. That needs to be punished from July and September. Man, what a candle. It says here the company will supply its filtering component that protects sensitive onboard electronics. Yep, that's what I heard. Yeah, I guess this is just in response to the fact that we're probably going to be exhausting a good amount of our arsenal. And so this company is going to have some orders to fill. Yep, CrowdStrike is up as expected. Let's see what Palantir is doing. What is the ticker for Palantir? Anybody know the ticker for Palantir? Put it in the chat for me. Let's look it up on AI. PLTR. Okay, nice little harmonic shark here, which again is as taught to me by my friend Cubes and Jarsky as well. Sharks are one of the most powerful harmonic patterns in harmonic trading. This is target 1 for Palantir when it gets there. Target 2 would be up here at a psychological 200. And then target 3 would be at 207 or higher. All right, guys, market pops off in 10 minutes. We're down to 13 viewers. That's my lucky number. Please, if you could, chat engagement is great. I appreciate that. If you have not already for the day, please hit that like button, subscribe, turn on notifications. That all helps put me in front of new people. Let's see what the metals are doing. This is silver on the day. Let's hit target one of this bearish crab. Oftentimes, when these targets are hit, they like to retrace back, which I could see that making sense, because this could be the accumulation of the shorts. This could be the manipulation. Could go to a triple top and then drop back down to these strong lows down here at 143. Let's see if the shorts, shorts have a bullish crab. This looks like a pretty basic dragon pattern. Gold shorts. Let's check the TQQQ. So this might be a good teaching example here of what I was talking about with DRT. Okay, so right, we got liquidity here. And then obviously, look, let me get this magnet off. You got liquidity here, right? People are longing, have their shorts here, or their stop losses. People who are shorting had theirs here. Little retrace. Longers are down here. Shorters are up there. They take out the shorters. They come for the longers. And then they took the whole thing back up, right? So if you use DRT, which is, again, fibs that are just quartered, what you'll notice here is I was talking about if you see a fair value gap that goes through a quarter after this is key. You have to have shorts taken out, and then you have to have the longs taken out. If you can find a bottom, here's a beautiful swing failure pattern with an inverted fair value gap setup. I mean, this is like an A+ trade right here. Here's your bearish fair value gap. Here's the inversion of that. And notice how this fair value gap went right through the 2.5. Came back, retested. This is an entry all day long. More powerfully, fair value gap the crap out of the 50. And it is just off to the races at that point. Fair value gapped each quarter here. So that's just something you can look for. Look for situations where a local high is taken out and then immediately they take out anybody who was longing. And then patiently wait. Don't just enter, because it can keep going down. You don't know when the bottom is, right? The market makers, Qui-Gon, what's up? The smart money will leave the paper trail behind. This is the paper trail. Paper trail's right here. They took out this liquidity. Here's the local liquidity that started this whole run. Down here, came down, next candle, closed back above this point right here, this local low. And then fair value gap, Darth Maul candle right here, indecision candle, and then wait for the retracement, and then enter. So any one of these would have been reasonable. I probably would have entered, to be honest, on this first one. I would have set the stop loss at the base of the second candle. You can go all the way down here if you want. I'd prefer to be a little bit more conservative. If this thing's going to run, typically it's not coming anywhere near down here. It's not going to go typically past this fair value gap. So sometimes they do some scammy stuff, but as long as you're just below the wick of this second candle of this candle pattern, you should be good. So I'm risking 0.45, so 0.5%. And in this circumstance, I probably would have targeted 75%. But again, being conservative, I set a notification on a 1-to-1, which again is only 0.5%. So this is another reason why, you know, if you're one of these people who's able to put $1 million into the market, 0.5% is a great move, right? Hey, that's some money. But for the rest of us who don't have $1 million, 0.5% is nothing exciting, even if you're trading with 10K. So that's why I prefer to apply these ideas to stocks that are moving on a daily, and see if I can find entries. All right, market opens up in 3 minutes. I'm going to put some chill music on, and we're going to do some trading today. Again, for anybody who wasn't here yesterday, what we are looking for at market open is a range to be formed. First 3 candles on a 5-minute chart, develop your opening range. That's where most of the volatility is traded. There's often manipulation, but these things can set a tone for the day. When you do break above or below these structures, depending on certain confluences, did it fair value gap through this previous liquidity point? How much volume was there when it happened? You can look for retracements and enter positions, and oftentimes, whichever way it breaks on that range can lead to, certainly at minimum, 1-to-1s. But as you can see, with the exception of whatever this BS was, they can go. See, this is an example where discipline is important because MOBX is hitting my projected order block, but I ain't touching it. Sticking to my rules. I'm waiting for the first 15 minutes. Yeah, one of the things I'm mindful about is, yeah, this is an order block, but look at the context here. Here is relatively equal lows, which algorithms love to come for because what sits below relatively equal lows typically stop losses. Second thing is we have the 50 fib right here, equilibrium. So if you were to do a liquidity grab here, right, powers that be, where would you likely want to do it? Well, you would want to penetrate this order block, take out all this liquidity here, spike it to the equilibrium, maybe even below it to this order block, which is marked in green. Fill in these inefficiencies here, these fair value gaps, and then maybe take it up. So we're going to patiently wait and see what they decide to do. Because, good rule of thumb, if you don't see manipulation, don't enter the trade. Because without that manipulation looking for liquidity, you are the liquidity. You become the liquidity, and you don't want to be the liquidity. Notice how in the chart in front of me on OBX, it is bouncing precisely off the 50 fib of that order block. That is not a coincidence. That's the algos. That's what they do. This is the order block. The very last down candle, the last bearish down candle before an upturn is an order block. This is where most of the orders are stacked. Now, ideally, what I want to see on, if I'm going to trade MOBX today, let's get rid of this DRT fib. I want to see this liquidity get swept. And then wherever that lands, I'm going to do this. Let's say it comes down to the equilibrium, for example. I want to see a fair value gap bullish that penetrates this 25 number. And then I'm going to look to try and probably get in. What's promising is that they're sweeping this this purple dotted line is, again, the New York midnight open. Hopefully this is a liquidity sweep. We're also at a pretty good psychological number of $1. Gotta have patience. Let it come to you. If it doesn't come to you and it takes off, that's fine too. You don't have to be in every trade. Jasmine, I usually try and stay away from earnings. It seems, I've noticed with earnings, it doesn't seem to matter if the news is good or bad. It's almost like the opposite. If the news is good, it seems to tank it. If the news is bad, it goes up. It makes no sense to me. Guess that's the old adage, right? Buy the rumor, sell the news. All right, 15 minutes is closed. I like this bullish engulfing here with volume, but what I'm not liking is this equilibrium, this 50 fib. See how on this chart right here, IONQ, New York Midnight Open, came all the way down and swept anything below that. Okay, well, MOBX did what I was looking for. It swept that liquidity that we talked about. It's hit the equilibrium, which we also discussed. So let me start trying to figure out if I'm going to execute any type of plan here. We have two major bearish fair value gaps here. Drop below the New York Midnight Open. Took out this liquidity we spoke about like 20 minutes ago. Filled in big portion of this large fair value gap. There is still an order block down here. It would not be crazy for it to reject at one of these fair value gaps. Probably the one at the 2.5 maybe. Come back down. And then maybe do some sort of reversal here. And ideally what I'm looking for again is a fair value gap to the upside with volume that goes through this 2.5. I would say that if I could get that, the risk to reward is definitely there, because if you look at the confluences, we're We're sweeping the New York Midnight Open. We've swept this liquidity. I'd be happy with that trade. Whether it goes my way or not, I would say that the probabilities would be on my side, but I'm not ready to enter yet. Gonna be patient. CCH is breaking out of its 15-minute orb. That's your liquidity. These would be basically what you would consider to be relatively equal highs. It's now taken both of those out. Question is this a sweep of liquidity? And the way we will know is how this 5-minute candle closes, and then we wait for confirmation on the second candle. It is above the New York Midnight Open right now, but too early to enter a trade. BURU just swept liquidity on these relatively equal lows. Fair value gap here, took out the 2.5. Back tested. Here's the order block. That wicked through it though. Yeah, this one is probably going farther down, because right here, this candle, that local low, this is a change in the state of delivery to the downside. So I would say a large percentage of the time, it will backtest this fair value gap at that change of state of delivery and go lower. So I'm not super interested in this one yet. Yeah, so here, this is exactly why we wait. All right, like there are plenty of people this morning that had this order block on the 10-minute, saw it hit that 50 fib, and did not have the patience for confirmation candles. They couldn't wait another 10 minutes. And they are, you know, they entered, they set their stop loss below this equal low, and they're liquidity now. So I'm just going to keep dragging this DRT down until we get some sort of inverse fair value gap. That makes sense in context, right? Like it can't just be an inverse fair value gap in midair. We want it to take out some sort of liquidity. We want a manipulation move. So it looks like yesterday's 15-minute opening range is also basically the order block here that we're going to keep an eye on. Turn these back to gray. Let's check out the volatility. Oh my God, 232%. What is this? Definitely adding that. Oh, it's already on there. My goodness. DXST. A lot of opportunities this morning. So much going on. Certainly we will find an A+ trade somewhere. Look at all this. Is there a war going on or something I don't know about? Relatively equal highs right here. It's got to get through this triple top first. I have a feeling this one's going to take off, but I'm not going to. I mean, it makes sense in context. Triple top is probably the manipulation move. I mean, I'm just spitballing here, but if I had to guess, this is going to get disrespected, but then validated. So basically, if I had to guess, it's going to take out this one I'm not going to trade, but we'll come back and look at it just for fun. Here's relatively equal highs. That's where your liquidity is. You can see you have a bearish harmonic attempting to form. Its range right now is anywhere from here. It would not shock me if the play here is that it takes out this top, takes out this liquidity, and then destroys everybody and goes for a lower low. Probably back to this order block. This will be the manipulation move. This is probably not bullish accumulation. This is probably bearish accumulation to continue this current trend to the downside. I mean, you can almost see this is like a this is like an ABC correction. Huge inefficiency here. Big fair value gap. Got a shelf here, roughly in this range. That would have been your previous resistance. That could be a logical spot. Maybe a near-term bounce here. Something like this. That'll be fun. Let me set an alert. Maybe I'll be right. Or I'll be wrong and it'll be at, $1 million by the end of the day. right, let me go back to my friend MOBX. What are we doing here? We are dropping. Okay, I like this. Of course we're dropping. It went up 532%. We're not going to the moon. Correcting. All right, so nobody cared about this order block. We are at a pretty small order block right now. Let's look at the volume on that. When this one traded, volume was pretty low. I mean, it's a very tiny candle. The next one here, volume didn't make it above the SMA. I'm looking for order blocks. Nope. Move out of my way. This one right here. Wow. Could it really go back to 38 cents? Yeah, you got it. Let's do an anchored VWAP or anchored. I always do that. I always say anchored VWAP when I mean anchored profile. Okay, so 5-minute chart. You can see how. Imagine if we dropped to like a 10-second chart, there would have been some points of interest, some accumulation, but it's just sitting in a void. It doesn't mean anything. We've talked about this before. This shelf right here. This is the bottom of the shelf. Notice how the bottom of the shelf lined up with the relatively equal lows that I pointed out. If this was a turnaround point to the bullish side, you would expect strong defense of this bottom of the shelf here. A lot of lower wicks, a lot of buyers saying no, we're not dropping. They did not do that. I mean, it fair value gap down, penetrated the bottom of the shelf, which means now we are looking for a point of defense. We want to see, because the momentum, once you lose these shelves, your momentum takes you to the next hill. And now we're waiting to see what they do here. We are at an order block, but again, a pretty low volume one. So next line of defense realistically is like here, which I have a yellow line at. Why do I don't even know why I have a yellow line. Why do I have a yellow line? Is this the one I put the alert on? I don't know why I have a yellow line, but I'm that good. It doesn't even matter why. It's because I called it. All right, I don't want to get telescope vision here and just focus on this. It'll tell me. I got alerts set up. Let's see what else is going on. All right, well, anybody here who subscribes to the soon as the 5-minute candle breaks the opening range, you enter your positions, just got wrecked because grabbed equilibrium, took out liquidity, and now just pumping to the upside here on AIFF. I know what you're thinking. sTAtic, when are we going to trade something? I don't know. We're going to do it when the timing is right. I don't need to make 12 trades in a day. I just need to make one, like MOBX yesterday, and be up a G. I mean, Christ, if I can make a G a day, that's, what is that? It's 20 grand a month. Some days there are no trades. Good morning, Mouse. How are you today? JZXN. Relatively equal highs now. Weak high. I keep coming back to MOBX. I think I'm fascinated with her. I think my girlfriend's listening. I'm fascinated with you too, baby. It's just MOBX right now. What is this? We have not taken liquidity out. Let's try that again. Pass. You know what's funny? My dad took me fishing when I was younger. And what I learned from that experience is I hate fishing. It's got to be I hope I'm not going to lose like half my viewers right now. I hate fishing. It is, oh my God. It's worse than golf. What a way to ruin an afternoon. Or a morning, because, you know, you got to wake up at 4:30 in the morning like you're hunting deer or something like that, because the fish apparently, I don't know, they're awake, they sleep, whatever. Fishing is so boring. And yeah, but then I became a trader and stare at charts all day, which is ironic because I feel like I'm fishing. Should have brought a sandwich. Speaking of sandwiches, I have a theory about sandwiches. There's a certain way to make a sandwich, and there's a certain way not to make a sandwich. And it's a very simple formula. I like mayo and spicy mustard, not like I forget that yellow mustard. I need Jewish mustard. I need New York City Cat's Deli mustard, spicy mustard, right? And when you make the sandwich, you put the mayo on one slice, you put the mustard on the other slice. But I feel like quizzing y'all. Which side does the tomato go on, and which side does the cheese go on? Can anybody tell me? I'd be curious your opinions. Not that your opinions matter, because if you don't agree with me, you're wrong. Lovely bullish engulfing here, but again, look at the volume. Nothing. I mean, I could be wrong here, but this looks like a back test. I mean, what do we got here? This is the bottom of the volume profile, at least for this little hiccup here, and yeah, I'm not super impressed with this bullish engulfing. I mean, it's great. It's big. That's what she said. But where's the volume? Where's the meat? Let's see. Here's our order block, 5 minute right here. Look at that. She hit the 50. Well, no, a little bit below. Close back above. I mean, if we look at the volume profile, the bears are now going to look to defend here. Which, and this is what fascinates me about charting. I love this shit. Look at where that lines up. I mean, it's like the Matrix. And look at that one right here. Here's the last downward candle before this uptrend. Look at that. Look at that. Amazing. All right, what do we got here? Let me look at chat because this stuff is important. Forget about trading for a second. What do we got here? Mastica. Tomatoes goes at the bottom. Yeah. Well, no, man. No. I disagree. I mix the mayo and spicy mustard. Any other way is for rookies. Ugh. I know who that is. Barbecue Inc. Whatever, Jarsky. If you love mustard, you slap it on every layer. Okay, that works too. No, very simple. Here's the theory. Mustard goes next to the cheese. Cheese and mustard have to be in contact with each other. Tomato and mayo have to be in contact with each other, right? So here's how I make a perfect sandwich. Ready? First layer, bottom of the thing, right? That's the bread. You got mustard. On top of that, you put cheese. On top of that, you put your meat. On top of that, you put your lettuce. On top of that, you put your tomato. Then you put your final piece of bread, and that piece of bread has got to have mayo on it. And a little pro tip here, you know, for the non-rookies like Jarsky, put a little salt on your tomato. Makes a huge difference. And if you have a loving girlfriend like I do, get her to make sourdough for you. Ooh, DLXY is tempting me here. So we have... I feel like I'm getting roped into something here by even looking at this. Yeah. So we do have a fair value gap. I mean, we could quarter this again. Here's your quarters. Let's quarter the quarters. Nice little fair value gapping above this quarter. Fair value gap big time bump above the 50 through the 75. But if we delete all that and we go to the bigger thing here, it got rejected right at the 2.5 for the moment. Oftentimes, here's a hot tip about fair value gaps. First candle, second candle, third candle. You have a couple options here for the third candle. If you see a bullish candle with a high upper wick, right? High upper wick, or even a bearish candle. If you see a giant wick and come back down, oftentimes, percentage-wise, that will indicate that this fair value gap is not going to get respected, and it will invert itself. If you see a large third candle that is just a parabolic bullish candle with hardly any wicks, it's going. It's probably not going to retrace back into this fair value gap. It might retrace back in on the new fair value gap it's going to create. Now here's the third one. When you see a bearish consolidation candle with low volume, this is key, low bearish volume, that oftentimes I've noticed will substantiate this fair value gap. But what I try and stay away from is fair value gaps with a bearish candle on high volume. A lot of times that's not really a good sign. Let me see if I can find an example. Okay, so here's a good example. Big giant fair value gap, bearish consolidation. Notice how the bearish volume did not even come close to the previous candle. And then we went up higher. But when we go back to this one, what concerns me is at the moment with a minute 40 to go, the rejection volume is pretty friggin' high. Yeah. Yeah, this is going to invert. Bullish fair value gap, bearish inverted it. It's probably going to back test and then go down. Anyway, whatever. Not trading that one right now. Come on, let's see what my friend MOBX is doing. Okay, so been a few minutes since we looked at it. Again, we talked about this. This is the bears defending. They need to defend this volume profile right here. And you can see so far, they are defending it. Excuse me. Yeah, I think MOBX has more time to go down. All right, let's see if... What is my friend here doing? up 244%. Bears are defending. Swing failure pattern is in process here. 5-minute chart. What do we want to do here? Here's your liquidity. Never really swept the New York midnight open. Liquidity at 35. Did sweep that. This thing is long gone from the DRT swing. So, I mean, obviously, if we had been watching this, yeah, this is fair value gap to 50. Let's do a regular fib retracement on this bad boy and see if we've hit 141%. We have. We are way past that. Okay. Candle close above, rejected. Candle close above, rejected. How much do we have to go from here to get to? It's a 20. No, that is a 19% move. 3 minutes to go on this candle. Let me think here. So let's say this closes above. Where would I set my stop loss? That's 5% to this candle. That's a 20%. That's a 3%. 3-to-1 ratio. Bullish fair value gap. Bullish engulfing fair value gap with rising volume. This one's risky. I'm getting itchy though. I want to get in a trade. sTAtic, what is absolutely favorite indicator? Me, duh. Kidding. Well, you know. My favorite indicator? Do I have a favorite? Let me think on that. What do I use? I don't know a favorite. What do I use the most? I mean, I guess probably the one I use the most would be RSI to look for divergences. Divergences are probably the most beneficial indicator to a trader to start giving you an idea of, you know, change in direction. I mean, look right here in front of us here. We have a bullish divergence here. Price went, well, technically, you got to go by, not by wicks, but by candle. Yeah, it's still a divergence here. So small one. Price action was headed down. And then conversely, same time period, RSI was headed up. That is a divergence. This is a pretty classic dragon pattern. This is the head of the dragon. That's its first foot. That's its hump. That's its second foot. And once it breaks from the head to the spine, to the hump rather, once you break this and you can see it back tested it, you have some targets, especially with the power of the RSI divergence. Target 1 is going to be the hump, and target 2 is the head. Which, thank you for pointing out to me, because now I'm thinking to myself, wait a minute, I have a dragon pattern here. Maybe this is going to help me make an entry. Let's see how we retest this bullish order block. This bullish order block is getting hurt. I mean, maybe we want to get risky here. I could put a stop loss here. I would be losing 1%. I could lose 1%, right? What's 1% amongst friends? 20% off. Maybe we're just going to do it here. I'm getting bored. Hold on. ASNS. Do we have volume? Let's drop to a 10-second here. Do we have an inverse? We have an inverse fair value gap. Ooh, I'm getting itchy. Oh, let's set our stop loss for 63 cents. Yeah, screw it. Closed above, second candle. Was there a liquidity sweep? I don't know. Well, we are at equilibrium here. What can I get in for? Show me something. Get this fair value up here. I'm liking this better by the minute because it's getting cheaper. 2% I would lose. Bullish engulfing. Do we have volume? If you can get a fair value gap with a bullish engulfing with volume, I'm in. Wish me luck. Stop loss. Let's go with 63. 63 trigger, 62 sell. Is that the right number? Yeah, 63 or 63. What do I own this thing for? I did a market buy. I own this for 66. I paid too much. All right, let's set this up. 66. And my stop loss is 63 with a 63 trigger. 62 is my minimum I'm willing to take for it. Is that right? That's right. I think, yeah. All right, let's think about this. Let's go back to the 5 minute. Am I going to get wrecked on 2%? I think I might. Yeah, goodbye. Well, that was quick. Welcome to Static Trading, where we lose 73 bucks in a minute. Stream 1, I blamed you guys because I felt the need to entertain. Stream 2, I said I'm not doing that anymore. And it paid out. That was yesterday. MOBX. I was very patient. This time, I'm not blaming you. I'm blaming myself. I got bored. Right now, I'm trying to find reasons why I should not have traded that. delete this. Swing failure pattern. This is probably... This was probably the signal that should have told me not to do that, because this is the bullish order block. And it did not hold that order block. It wicked through it with no real purpose. It didn't take out any liquidity. So that was probably an early sign that it's coming for more. That is on the 1 minute. So in retrospect, that was probably a stupid trade. This one's interesting. Breaks the opening range. Finds support roughly at the New York Midnight Open. Fair value gaps the entire thing. And is now headed to the side, to the upside. Breaks out of that on a fair value gap with a little bit of increasing volume. Does, like, you know, I'm sure we can find a time frame where that might be a 3 rising methods. Where are you going? Make anything on this, even if it happens? 2%. Kind of decreasing volume here, though, on that final push through. To break this fair value gap on this candle here, it really didn't have any follow through volume. It never hit this order block. Yeah. So this is a manipulation on this candle right here. Very easy to see on a 5-minute chart. On the 1 minute we were looking at a second ago, it looked certainly more promising. If you just look at the one, inverse, all this fun stuff, but then that's why you got to look at multiple time frames to try and get a big picture. Okay. There is really no DRT set. Oh yeah, I guess this would be here, right? Low. Well, that's incorrect. Maybe I didn't see that before. That is not a DRT setup because you need to take out a higher high. So maybe when I was looking at this chart, I didn't see, I was thinking of this here. I'm going to correct myself on that. Rejected at the New York Midnight Open. It has, this is a pretty classic ICT setup. Order block. Again, no real volume. If this candle is to be respected, where's the volume? Also, HSI, RSI, I don't know. We do have inverting potential fair value gaps. We're struggling this morning to find something perfect. What's MOBX doing? Where's my boy Blue? I mean, this isn't anything. This is just, this is retail. This is retail chopping around, playing grab ass. The move is going to be probably below 75 cents at some point today. Let's see what the alerts are doing. We have a breakout of the 15 alert, but you can see it's manipulation. We have a breakout of this stock, pulling back into the fair value gap. Here's your consolidation candle, lower volume, which I like. It is interesting that on this liquidity here, on a 5-minute chart, both of these two candles closed above. So that is promising. Dropping to a lower time frame here. Two swing failure patterns. I would want to see this one here end with the next 44 seconds for me to be interested, and in a bullish candle with increasing volume, which clearly we're not getting. So the fish are not biting today. Change of state of delivery is here. There was a break of structure. Yeah, here's another hot tip with swing failure patterns. When you see a swing failure pattern, so this candle brought us down to 78.91. This candle brought us back down to 78.73, but then yeeted up and closed above the bottom of this candle. That's a swing failure pattern. When you see the next candle is bullish, but the volume on that candle is lower than the swing failure pattern volume, that is typically a sign that there is further downside to come. And as you can see, yeah, you did get one little candle here, but then classically another swing failure pattern at the top where candle closed above previous high and closed below on the second candle. So anytime I see a swing failure on the bullish side with a bullish candle that has less volume, I stay away. All right, let me hit chat here. What do we got? Not a Mouse loves mustard. Which way is crowd going? I don't know. Let's see. Crowd is doing nothing today. Crowd is range bound between the opening 15-minute range. Nothing to report there. APLD, take a look. Okay. Yeah, she up. Took out these relatively equal highs right here. That's a weak high. That's a strong low. We're above equilibrium. What would the next target be? I would say that the shorts are up here. So this would be the next target. Now here's the question. 1, 2, 3, 3, 4, 5. 1, 2, 3, 4 to that level. 5. So we have a potential Elliott wave 1, 2, 3, 4, 5. You have two competing, and they're pretty far back. They're from 2 days ago. Two competing bearish harmonics that have played out. It looks like this shark here is doing a 3-day-old possible type 2 return. Now listen, I'm not saying that this thing can't go to the moon today, but it's already kind of made a, from the opening range here, if you take the top of that candle and the bottom of that candle, it's pretty darn close to hitting a 241 fib extension. And you have an order block up here. So basically, if you buy now, you're buying at a premium. Could the premiums keep premiuming? Yeah. But this is probably a trade I wouldn't chase at this point, personally. Notice on this fair value gap too, candle 3 was bullish, but the volume was pretty low. As I was saying before, if the volume is not increasing on a bullish candle, bearish candles, okay, you can have a retracement. It's retraced, bearish volume is there, but it's lower than the previous candle. I like those. Bullish candles as a third candle to the fair value gap with less volume than the previous, it's a momentum loser. Basically, think about what that says: is the bulls tried, and the sellers were kind of like just, hand on the forehead. Nice try, McFly. Well, we'll see what happens here. If it comes into this fair value gap and can print a dragonfly doji with volume, that might be a good sign. All right, what's next on the list? Almost the same as trading drunk. I don't know what you're talking about. Late to the party. Why the bump up? I don't know who's doing bumps in chat, but let's keep it clean, all right? AUUD. Yeah, I don't know. Not really much I can tell you here. No liquidity. It's Atari, and then some stuff is happening. I wouldn't really be able to do anything with that. Am I looking at the right one, Jarsky, or am I looking at something wrong? It hit low 70s. Yeah. I don't know how you... Like, what do I do with that? Unless it's just the exchange I'm on. I don't know. Circle. 5-minute chart. Okay. Little tiny sweep of liquidity here. I wouldn't personally touch it. Again, I'm not a scientist. I can't tell you if it's going to pump or dump. I could just tell you what I would be looking at. Yes, this is a weak high and relatively equal highs. We are below the 15-minute range. Certainly, this could be a tiny manipulation move to take it higher. What concerns me is when we came down here on this candle, not really seeing a lot of buying volume. So right now your challenge is what I would... This just looks like accumulation to me. I would expect this to just continue to kind of range bound, maybe for the day. Some sort of accumulation. If it is going to go breakout, I would think that what I would look for, can't guarantee it, but what I would look for, which would make sense in context, is a return to this bullish order block and the New York Open, which if you could get some sort of manipulation before a pump, that would hit all points there. You'd get reaccumulation, you'd get your manipulation move, and then you'd get your distribution, if that's where it's headed. You also have equilibrium here, which is the 50 fib. So there's a lot of confluences that would be dragging this down towards these numbers here, 3 that I can see. 5-minute swing failure pattern. Let's see how this next candle... Oh, this is on... I'm sorry, I'm on the 10-minute chart. If I was to trade this, I would... To try and get some sort of short scalp, I would maybe look to see how this candle closes on the 10-minute chart. Again, if it closes bearish with low volume, that might be a good sign. If it closes bullish with higher volume than the swing failure pattern candle, that might be a good sign. But this is not something I'm going to trade right now. I don't remember. Jarsky, thank you for being my first official troll. You mentioned that to me in Discord the other day. I don't remember. I remember the genius comment when I think Clive was there. But I don't remember if it was this chart. I can't imagine trading this chart. There's no, this is, I think it was a different ticker. Because let's be honest, you know me, bro. I don't trade pixelations like this unless, let me, how long ago was that? Could it have been here? Oh, you may be right. You may be right. There's a box here. This could be a default box. Maybe TradingView put that box in there. I don't remember putting that box in there. Wait a minute. Yeah, no, there's no box. I never traded this. If I had to guess, I don't remember it, but if I had to guess a reason that I would have maybe gotten in this trade, would have been maybe something to do with this triple bottom here and this liquidity grab. Maybe I entered on this bullish candle. I don't know. I just don't remember it. I don't remember which chart I was on. But yeah, it does appear I've been on this chart before. There's a couple of drawings. Oh, they're gone. Make sure I get rid of all. Oh, there's one more. Never happened. I don't know what you're talking about. All right, guys. It's almost 11. I think what I'm going to do at this point is do one more scroll through on a 5-minute time frame from top to bottom and see if I can find anything of interest that maybe I can enter and leave you with today. But again, I'm not looking at her positions for entertainment. Some days there will be trades, some days there won't. Maybe I'll find one, 1 o'clock this afternoon, 2 o'clock before power hour. But let me just scroll through and see if I see any possible opportunities here. So starting at the top here, AAOI, it's just in its range. In its range. A little manipulation in the range. It's pretty boring. I mean, look at this. In the range. In the range. Everything's in the range. Unfortunately, I can't control that. Seems the market is... Yeah, I mean, we're through what? 15 high volatility stocks, and they're not volatilizing. Where's the volatilizing? Volatize for me. That should be a word. Well, that's good. This one's a good short opportunity. This could be a bull flag. What do we got here? This could be manipulation right now. yeah, I mean, this is, again, like, here's what I was talking about in the first stream. You know, when you start off trading, it's like, oh, I have a bull flag, so I'm going to buy. But this is, that stuff might have worked in like 1920, but now with algorithms and bot trading, and here's what would concern me about this bull flag. This fair value gap, if you look left, this red line right here, you see here when they cleared the liquidity, they really spiked that sucker up and then closed it back down below that liquidity point. So that would be a swing failure pattern. They're doing it again. I wouldn't trade it. You're buying at a premium. You know, what you need to see is it break another high and close above that high. And then you can start entering a trade with a stop loss below a shelf. But this just looks dangerous to me right now. And then zoom out. You got a whole bunch of fun stuff going on here. You got, this just could be one big bear flag. You're coming off a downtrend after a huge pump up. I mean, this could be an ABC start where maybe it returns back to where it came from. So yeah, this wouldn't be something I would trade. But what's kind of gross is that is the only thing I could find out of 20 stocks this morning that's even trading above its opening range. All right, let me look at MOBX, and then I'm going to go get some breakfast. Again, here we go. This is just consolidation. Nothing's going on. You need some sort of major move to the upside. What you're going to want to look for any type of scalping is a potential change in stated direction. But I don't want to sound like Debbie Downer. I would be hesitant about that change in stated direction because there is a volume shelf right over your head, even if you do break this. And also, where was the, let me delete this. Where is the manipulation move? What did we manipulate here? Nothing. We've hit a potential order block, but where is the manipulation? Don't have it yet. So I would stay away from that. All right, guys. I hope I didn't disappoint anybody today. I don't control the markets. But right now, let's see, where are we at? I am down $73, 0.06%. It's devastating. Probably going to take a break, get some breakfast, and then I will be trading later today in the Discord. Probably be hanging out over at Turbos. And yeah, I'll see you guys tomorrow. Thank you for joining, and I hope everybody has a great day.